Hello friends, this is Leo. Welcome to the module 5. In this module, we are going to talk about the trend bias using CPR and previous day levels. This is a very important module, so please pay attention to these modules. Okay. Trend bias using CPR and pivot levels. So we often ask, do we know what is the market trend, right? Many of the people may not have an answer. But with CPR, we can at least identify what the trend is going to look like. It could be either bearish, could be either bullish, or even it could be sideways, right? Sideways is also a trend, but we need to make sure that we understand the trend before we get into the trade, right? So let's understand like how we are going to look at the trend using the CPR in this point. So CPR is not just only a support and resistance zone. It is also a very, very powerful tool to determine the bias. Okay. Let's say, for example, if the trend, if the price opens above CPR, the bias is bullish. And you should look for a long trades. If it opens below CPR, you look for short trades. Okay. If it opens inside CPR, the market may consolidate before deciding the direction. So use the CPR to frame your mindset before the trade begins. Okay. This is very important. Now, let's take a look at the narrow and wide CPR days. Okay. So what is the width of the CPR really matters? The answer is yes, because it tells you what's the mode of the market is. Technically, a narrow CPR means compression, expect a breakout or a trending day, and a wide CPR suggests expansion, expect sideways or a range bound market. So narrow CPR combined with the price breaking out strongly can lead to big directional moves that we are going to look at some of the examples. Likewise, wide CPR with price inside it, let's be cautious about it because this is often a choppy day. So now let's see how we can use the previous day high and low with CPR. And I often discuss this topic in the trading room. People who have joined my trading room who knows how important it is to look at the previous day high and the previous day low. And when we combine this, the CPR, it adds more value to our trading setup. So when we combine the previous day high and low, it gives additional context. So technically, if the price opens above the CPR and breaks the previous day high, it confirms a strong bullish intent. Okay. Likewise, if the price opens below CPR and breaks the previous day low, we know that the sellers are in charge. So trend bias using CPR and pivot levels. Now let's take a look at the previous day high and low with CPR. Okay. So when we combine the CPR with the previous day high and low, it gives additional context. Okay. So if today's price opens above CPR and breaks the previous day high, it confirms strong bullish intent. Likewise, if the price opens below CPR and breaks the previous day low, bears are in charge. So these all act as a momentum gates. When they break, you just have to follow the move. In addition to it, we also look at the CPR and the VWAP alignment logic. Okay. So when the CPR and the VWAP align, it strengthens your bias. Okay. Whatever the bias is, it could be either bearish or bullish. Right. For example, if the price is above CPR and VWAP, the bullish bias is strong. And technically, what we should do, we should go for a long, or we should wait for a pullback to the VWAP and then take a long from there. So likewise, on the opposite side, if the price is below the CPR, right, and VWAP, the bearish bias is strong. So look for a short, wait for the price to pull back to the VWAP and look for a short at this point, right? So if this is misaligned, for example, right, let's say that price is above CPR but not below VWAP, then we have to wait for confirmation because market is not decisive yet and we have to wait for some confirmation. So let's not jump into trades on those scenarios. That's what we often tell to people who come and join my trading room. Let's be patient, look for a confirmation, and then you enter it. So when we combine these two, right, when we have a CPR and the VWAP act together, it's something like two generals pointing the same way, right, which is additional confirmation for us. Now, so let's talk about the CPR shift day over day, right? And we got to understand that the CPR is a very, very core area, core zone on a trading day, right? So the CPR shift will make a big difference, and it gives a lot of clue in terms of how the smart money is moving the market. Could be either bullish or the bearish, right? So let's say, for example, if the today's CPR is above yesterday's CPR, market has a bullish tone, right? If the today's CPR is below the yesterday's CPR, market is having a bearish tone, right? And likewise, there are days that the CPR could be very flat, which indicates that market participants are waiting for a decisive move, right? So when there's a flat CPR, we know that market is not deciding on the move yet. So we know how to trade those things, right? So we need to understand these things very clearly so that we can shift our positions according to the market conditions. Okay? So these subtle CPR changes often reveal where the smart money is leading even before the price shows its hand. So this is very important. All people in the market are trying to follow the smart money. Who are the smart money? All the institutional traders, right? FIIs, DAIs, HNIs, right? They're having huge amount of money, and they are the one who decide where the market should go, right? So we as a retailer, what we should do, we should just go along with them. So all these informations what we have discussed so far, and also in this module, will clearly tell that how the smart money is positioning themselves, to the market, right? So this is extremely important. So oftentimes we have seen that we have seen a lot of gap up and gap down, right? And we get confused. Okay, if the market is gap up, we have to be bullish. If the market is gap down, we have to be bearish. It is not always true, because it's very tricky. It depends upon the gap up size. Let's say, for example, if the gap up is like 1%, 2%, given the market condition, and that is going to be even more tricky. And we have seen many times the market have a very good gap up, but then it falls immediately, right? So likewise, when the market have a very big gap down, the market would reverse from there. So what it tells us is that if we add CPR to the context, it gives a better clarity, right? So technically, a gap up move above the CPR technically is a bullish trend, right? But it again depends upon the gap. Okay. Likewise, when the gap up is happening, into the white CPR, then it is a probable chance that we would be fading those opportunities, right? Which is something like a mean reversion trends. Similarly, a gap down below CPR with strong momentum confirms a bearish bias. Again, we have to look at the amount of gap that it is forming on a particular day. Okay. Always ask, right? Is your price is respecting or rejecting the CPR after the gap? That gives a lot of clue, right? So we can look at those informations in this model, right? With some okay. So we're going to look at some of the examples. Width of the CPR reveals the market move, right? And you can look at this. This is a very, very narrow CPR compared to the previous day. The narrow CPR, and this is falling below the yesterday's CPR, which indicates that the market is not in a good mood to buy. It is a selling market, and the candle opened below the CPR, right? And it continued to go down throughout the rest of the day, right? So this is an example of the narrow CPR, and let's take a look at the white CPR. Okay, so let's take a look at the white CPR. We have seen this example before. This white CPR this is the white CPR compared to the previous day, and in this white CPR, price was rotating in the box for the entire day. So this is how the white CPR will behave, right? And also, let's take a look at some of the examples of the narrow CPR breaking out. Right? Okay, let's take a look at the next example, like how we can use the previous day high and low CPR, right? So if you look at this, this is a narrow CPR, obviously, right? And the price has fallen down all the way level. And if you look at the next day open, the price has got rejected at the previous day low. Okay, so this is one example of the setup which explains you about the previous day high and low along with the CPR. Let's take a look at this example for the CPR and the VWAP alignment logic. So the price is above the CPR and VWAP is also aligned along with the price, right? So CPR is a higher level, price is above the CPR, and the VWAP is above the CPR, right? So this gives a good trending day, right? So this is an example of the CPR plus the VWAP alignment logic, and let's look at some of the examples about the CPR shift day by day. Let's take a look at this CPR shift day by day, right? And if you look at this level, the CPR was at this price level, 25,000, right? And the following day, CPR is moving lower and the price is trending lower, right? And the following day after that, CPR was trending lower, the price was gone up, but then it was closed at the CPR level. And subsequent to that, if you look at the following day, the price was still going lower, right? So this is how we can look at the bias in terms of, okay, we know that CPR is trending down, so the bias is clearly down, right? So this is another example of the gap up and gap down, the CPR context. So if you look at this, CPR is migrating higher, right? And this day, the CPR had a upper move and the price had a gap up and it was above the VWAP as well and also above the CPR and the price was trending high, right? So this is one of the context on the gap up. Okay. So in summary, use CPR for buyers. Technically, above is bullish. If the price is above the CPR, it is bullish. If the price is below the CPR, it is bearish. Also make a note of the CPR width. There is no concrete rule that CPR width has to be this level and that level. It all related to the market context. Okay. And when we look at some of the days, context, we would know that it is going to be a breakout day or it is going to be a range bound day, right? But technically, we have discussed on the module 1 or 2. I don't. When we see the top central is equal to the bottom central, that clearly tells that CPR width is very very narrow, and those days one could look out for a breakout range. Okay? Always remember to align the CPR with the VWAP and watch out for the previous day high low if you're intraday trader. Similarly, you can do this on a weekly basis, previous week high and low, and also on a monthly basis, previous month high and low, right? So it is important for us to study the day-to-day CPR shift for any kind of a directional flow, right? And we can identify the market is going to be in a bullish trend or it is going to be a bearish trend, depending upon the CPR shift that happens on a day-to-day basis. So this is one of the very important framework that we create before the market opens, right? By looking at this, we would know that, okay, today is going to be, this kind of a CPR and it is going to form at this level, right? And then we can bias our trade according to those, right? And this is extremely important. And in the next module, we will bring it all together into complete trading setup using pivot plus VWAP concepts. Okay. Thank you. Jai Hind. Bye-bye.